Okay, so let's get right into it. When you first see the Apple Card, you just see this sleek, simple piece of titanium. But this isn't just another credit card. Not even close. It's a really bold statement about the future of money, a product that was born right at the intersection of big tech and high finance. Today, we're going to deconstruct it piece by piece and peel back every single layer. It all starts with this iconic minimalist design. It looks so clean, right? Almost effortless. But that simplicity is really a masterclass in hiding complexity. Behind this clean white face, there's this incredibly complex web of partnerships, a totally different kind of business model, and some seriously impressive security tech that's quietly changing how all of us think about what's in our wallets. So let's start on the surface, the part that we all see and interact with. What is it that makes the Apple Card feel so fundamentally different from every other piece of plastic you've ever had? Now, just look at the difference here. A traditional card is literally covered in your data. That 16-digit number, the CVV, the expiration date. But the Apple Card, it's a complete blank slate. And this isn't just about looks. It's a huge shift in philosophy. The physical card is no longer the main event. It's just a backup. The real card, the one that matters, lives inside your phone. And this digital-first idea is at the very heart of Apple's promise. You can apply in minutes right from the Wallet app. Your rewards aren't some confusing point system. It's actual cash, paid out every single day. They built their marketing around no fees to get rid of all those common headaches. And of course, it's all built on a message of security and privacy. The key thing to get here is this. Apple designed the experience first and then built the financial product to fit it. That's a huge deal. But here's the thing. To build that seamless experience, Apple couldn't just do it themselves. I mean, legally they can't. To offer a credit card, you have to be a licensed bank. So let's peel back that first layer and meet the team, what we're calling the partnership stack that makes this whole thing possible. And this table just lays it out so clearly. You see up top, Apple handles everything you see and touch. The brand, the Wallet app, the whole customer experience. Then, in the middle, you've got the issuing bank, which has been Goldman Sachs, doing all the heavy lifting, the credit decisions, the compliance, the actual banking stuff. And at the bottom, MasterCard provides the global payment network so the card works everywhere. Each partner just sticks to what they do best. But this partnership has been a real journey. It launched back in 2019, it expanded with a super popular savings account, but it also ran into some regulatory trouble. And now the big news is that a major change is coming, with reports that JP Morgan is set to take over from Goldman Sachs. This just goes to show that in the world of fintech, these partnerships are never set in stone. They're always evolving, and sometimes they break. Okay, so we've got this complex team in place. The next question is pretty obvious. How does everyone get paid? So let's follow the money and dig into the Apple Card's really unique business model. It's a fascinating mix. As you can see, one slice is pretty traditional, interest income. That goes to the bank. But look at the other parts. You've got Apple Pay fees, special merchant offers, and this is the big one, ecosystem sales. This is so interesting because it blends the classic credit card playbook with Apple's biggest strength, its ecosystem. It's a whole new game that's less about earning interest and more about locking you deeper into Apple's world. Let's look at how they do that. That 3% daily cash reward, that's not just Apple being generous. It's actually a strategic weapon. It's designed to train you to use Apple Pay and to shop with Apple's partners. It's a brilliant way to use their ecosystem to their advantage. By offering a better reward, they get you to use their payment platform, which makes them more money. It's a perfect little feedback loop. And here's the magic number that kind of explains Apple's real motivation. The Department of Justice has alleged that Apple charges banks a 0.15% fee on every single credit transaction that goes through Apple Pay. Now that sounds tiny, right? But Apple is essentially taking a small slice of billions and billions of transactions. It all adds up to a massive revenue stream, just for controlling that digital tap. Now, all of this, the clean design, that digital experience, the whole business model, it's only possible because of a really deep layer of technology that you never even see. So let's dive into the security architecture that makes it all work so smoothly. The core idea here is something called tokenization. Just think of it like a one-time password for your credit card. Instead of sending your real 16-digit number to a store, your iPhone creates a unique single-use token just for that one transaction. So if a merchant gets hacked, the bad guys get a token that's completely useless. They don't get your real account info. So when you go to pay, it's a simple three-step dance. 1, you unlock with your face or your finger. 2, your iPhone's special security chip generates a unique code for just that purchase. And 3, that encrypted token gets sent to the merchant. It's that simple and it's that secure. Your real card number never, ever leaves your device.
All right, so we've deconstructed the surface, the partners, the money, and the tech. Let's zoom back out and put it all together. What does the Apple Card model really tell us about where banking is headed?
First of all, this model is a massive hit. I mean, Apple got over 12 million cardholders in just a few years. And when they launched a savings account, it pulled in over $10 billion in deposits almost overnight. This just shows you the incredible power of Apple's brand and its ecosystem. They can launch a financial product and get millions of users in a flash, something traditional banks can only dream about. And this quote right here, it just perfectly captures the heart of this whole thing. This is the key takeaway. The Apple Card isn't just a credit card. It's a perfect example of what's called embedded finance. That's where a non-bank company uses its own platform to seamlessly offer financial products to its customers. So what we're looking at is a powerful new hybrid model. It's really a blueprint for a win-win. The tech companies bring the slick user experience and their huge customer base, while the traditional banks provide the regulated backbone and the money. Each side gets to play to its own strengths. So, what does this all mean for the future of your money? Well, it means the app on your phone is becoming your new bank branch and your bank statement, all rolled into one. Token-first security is the new gold standard. And most importantly, get ready because you're going to see a lot more financial products embedded directly into the tech platforms you already use every day. And this all leaves us with one final and pretty big question. As we move into this new era of embedded finance, the lines between tech companies and banks are just getting blurrier and blurrier. And it forces us to ask, if Apple provides the experience and a bank provides the license, who do you trust with your money? Who do you truly think of as your banker? The answer is getting a lot more complicated.